Hi, everyone. We're back with Ask an Angel with Jonathan Hung. And the next question I have is about rolling VC funds. Basically, what are they? Would you ever join one? What are the pros and cons of an investor participating in a rolling fund? Is there a downside for the fund manager or the companies they are investing in? So really, I would say rolling VC funds are something that's been created in the last year or so. And it's a really interesting concept. I know AngelList is doing this now. So the idea is that usually when you have a VC fund is that, you have general partners and you have limited partners, and it's a 10-year time period to maximize your investment. But really, when you think about a fund, a traditional VC fund, it's only for a 3-year investment cycle. For a rolling VC fund, the idea is that they're calling the capital within a 1-year such time period horizon, and from there they're really investing and ready to go. There's both pros and cons to this. I think some of the pros are that it's easy to understand. You have a really strict thesis, and you're telling people, listen, I'm not going to wait 3 years to have my money fully invested. And there's going to be like maybe 3 or 4 different calls. I can understand a quarterly call where it's like, every 3 months, I'm going to turn in money and then I'll be done for the year. And it'll be a little, hopefully, it'll be much faster in terms of when you can get your money back. And you don't have to wait for the full 10 years of a traditional VC fund. On the same time, not necessarily that it's a con, but it's just that a traditional VC fund, you can't really predict necessarily how well a company is going to be found by a VC fund. So sometimes, like, investing too fast is might not be the best. Like, look at current market conditions now. I mean, if you started a rolling VC fund during the height of COVID and the start of COVID, it probably wasn't a good idea to invest because you had no idea what the economy was doing, but you were kind of like basically you had to invest in a certain time period. So that's some of the bad things about being in a rolling VC fund because you only have a time horizon of 1 year to invest. Whereas in a traditional VC fund, you have a 3-year time period with the ability to add on additional years with the operating agreement.
Last taping. Here, I'm gonna share it.